Welcome back to Dinar Info News, the most trusted source for accurate real-time updates and deep dive analysis on global currency shifts, the Iraqi Dinar, Vietnamese Dong, and all the financial developments that could change your life. If you're subscribed to this channel, then you're part of a growing community of people who want to be prepared, not surprised when major currency reevaluations take place. And today's episode is one of the biggest updates we've ever released. You heard it right, massive RV update. Both the Iraqi Dinar and the Vietnamese Dong have shown signs of revaluation, and shocking new bank rates are surfacing. What we're discussing today isn't speculation, it's not just rumor. We're looking at verified shifts, bank memos, insider movements, and publicly disclosed financial indicators that all point toward one major truth: something big is happening behind the scenes, and it's now emerging into the light. If you've been following the RV journey for years, buckle up, because this may be the turning point you've been waiting for. Over the past 2 decades, both the Iraqi Dinar and the Vietnamese Dong have become central to the global revaluation conversation. Countless investors, economists, and even skeptics have weighed in on whether these currencies would ever reach parity, rise substantially in value, or remain suppressed due to political and economic instability. The answer hasn't always been clear until now. Multiple independent sources, including regional banks, international currency traders, and even quiet movements within central banks, are confirming that exchange rate adjustments are in motion. While the global mainstream media continues to ignore these developments, bank screens are beginning to show updated placeholder rates, and backdoor memos from institutional desks in Europe, the Middle East, and Southeast Asia are whispering the same thing. RV is no longer a matter of if, but when, and that when may be sooner than most think. Let's begin with the Iraqi Dinar, a currency with one of the most fascinating and painful monetary histories. In modern times, decades ago, the dinar held serious purchasing power, with rates as high as $3 per 1 IQD in the 1980s. However, after years of war, sanctions, and political corruption, its value collapsed. For years, the official exchange rate hovered artificially around 1,460 to 1 United States dollar, with black market rates dipping even further. But Iraq has been slowly rebuilding its financial infrastructure. In the last year, we've seen signs of accelerated reform, the implementation of digital payment systems, greater compliance with SWIFT standards, massive foreign currency reserves now exceeding $100 billion, and a clear desire by the Central Bank of Iraq to move away from dependency on the US dollar in daily transactions. One of the most telling signs of movement came earlier this month, when several Tier 1 banks in Jordan and Kuwait reportedly began updating their internal systems to include a floating dinar placeholder rates, something they haven't done in over a decade. At the same time, leaked internal communications from a major Gulf bank cited regional rate harmonization discussions, which is financial lingo for preparing multiple currencies for aligned reevaluations. Now, combine that with recent statements from the Iraqi Finance Ministry, where officials openly discussed transitioning to a more globally integrated currency exchange model. When you add up these developments, the international discussions, the banking system upgrades, the massive buildup of gold and dollar reserves by the central bank, and the new FX integration tools, the signs become almost impossible to ignore. Most recently, a trusted bank source out of Abu Dhabi revealed that a new IQD buy rate had been added to their private internal terminal, suggesting that some level of testing or preloading is being done. While this rate has not been publicly offered, internal figures mentioned numbers ranging between 26 cents to 38 cents per 1 IQD, depending on how the float is implemented. Again, these are not confirmed public exchange rates yet, but they do reflect what banks are beginning to prepare for behind the scenes. Moving to the Vietnamese Dong, we are seeing parallel patterns. Vietnam, unlike Iraq, has enjoyed decades of relative political stability and economic growth. It's a manufacturing powerhouse, a major exporter, and increasingly aligned with Western economies, particularly the US, in trade and defense policy. Yet its currency has remained grossly undervalued. The Dong has historically been traded at rates like 23,000 VND per 1 United States dollar. But even the IMF and World Bank have previously hinted that this rate doesn't reflect Vietnam's real economic output. Recently, Vietnamese officials have also started hinting at major currency policy shifts. Over the past 6 months, the State Bank of Vietnam has quietly increased its foreign reserve holdings and engaged in bilateral currency swap agreements with China and South Korea. These moves suggest preparation for a possible float or peg adjustment, which could support a controlled revaluation. Just last week, a leaked document from a currency compliance team at a Hong Kong-based private bank included a revised forecast for the VND at 15,000 to 18,000 per 1 USD within a 12-month window. That's a massive potential adjustment of up to 35%, and even if it's gradual, it signals that Vietnam may be ready to step into a new monetary era. The most shocking part, though, comes from reports on interbank screens. Sources from 2 regional U.S. banks, who must remain anonymous for obvious reasons, confirmed that they are now seeing non-public, non-client-facing administrative rates loaded for both the IQD and the VND. This is a common practice used in banking before a public rollout of a new exchange rate. The administrative rate allows internal operations teams to prepare for transaction flows, back-end adjustments, and Forex trading logistics. What's crucial here is that both currencies are appearing side by side in these test environments, suggesting a coordinated rollout, or at the very least, parallel timing. This gives further credibility to long-standing theories that both the Iraqi Dinar and Vietnamese Dong could revalue in a staggered but connected sequence, allowing for more efficient integration into the global financial system. What does this mean for investors? First, we need to separate hype from fact. While many have long hoped for a $3 plus RV on the Dinar or a massive 100x spike in the Dong, realistic projections grounded in economics and current market mechanics suggest more measured appreciation, likely in phases. The goal is to avoid massive inflation or deflation shocks. A controlled float, where the value is allowed to rise gradually based on market forces and trade activity, is far more likely than an overnight skyrocket. That said, a phased increase from 1,460 IQD per dollar to even 500 IQD per dollar would be life-changing for those who have invested carefully. Similarly, a move from 23,000 VND to 12,000 or 10,000 VND would reflect a substantial gain in global recognition of Vietnam's economic power. The opportunity here lies not just in the numbers, but in the structural shift in how these currencies are positioned globally. What we're witnessing is not just a currency adjustment, it's a global monetary rebound. Many emerging nations are working hard to escape dollar dependency, restore national monetary sovereignty, and reposition themselves in a multipolar economic world. Iraq and Vietnam are part of this trend. Both countries are aligning themselves with broader blocs, Vietnam with Western trade alliances, and Iraq with both Arab and Eurasian financial systems. It's no accident that both currencies are seeing coordinated attention at the same time. Central banks around the world are watching closely, testing systems, and preparing for potential asset reevaluations tied to currency movements. Some financial analysts even speculate that certain IMF policy windows are being discreetly opened to facilitate these adjustments under the framework of currency realignment or SDR recalibration. We must also consider the geopolitical backdrop. The world is entering a phase of economic realignment, with more countries adopting multi-currency trade systems. Iraq has already initiated oil contracts denominated in currencies other than the dollar, and Vietnam is rapidly increasing its digital trade capabilities. At the same time, many central banks are expanding their gold holdings, and both Iraq and Vietnam have been accumulating gold reserves steadily. These are clear indicators of a shift toward asset-backed currency confidence, something that investors should not ignore. If the Dinar and Dong are being prepared to serve a more prominent role in regional or even global trade, then their undervaluation must be corrected, and that is what we are starting to see unfold right now. Let's be honest, this is not the first time people have gotten excited about a potential RV. There have been false starts, misleading headlines, and even outright scams in this space. But the difference today is the sheer volume of converging evidence, banking system updates, real rate changes appearing internally, global reserve movements, official government statements, and the synchronization between two historically undervalued currencies. This convergence makes this moment distinct from past speculation. And for those who've stayed informed, stayed patient, and stayed grounded, this could be the beginning of the payoff phase. That said, investors must exercise caution and clarity. Engage only with verified dealers, never fall for get-rich-quick traps, and always track developments through credible sources like Dinar Info News, where we cut through the noise and bring you real insights. If you hold Iraqi Dinar or Vietnamese Dong, or if you're thinking about entering,